Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 12, 2018. Hey, Jedi traders, as always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, let's get into a quick recap for last week's market. Week 11, you can follow the recap just by clicking on my blog site here on tradingfibs.com, where the big picture and some of the key charts there that we'll go through, and then see where we are technically in the market as we move ahead. All right, so week 11, big picture, as market action on the four indices captured here, RTY, NQ, YM, and ES. We had contract rollover week. I'm glad to get all the volume back into the next contract, the June contracts on the futures markets. CPI core inflation data numbers were out as we roll into next week, looking at FOMC. So the key word here is pullback in week 11 to the perspective. That's right, perspective 10-period moving averages. After NQ making a new all-time high, you can see volume was building up through the week as the new contract volume rolled in. A little still concern here on the YM is price action really having a struggle to move above that 50-period moving average. And I love to watch those simplest of moving averages each week. Is the 10 above the 50? Is the 50 above the 200? And where is price in perspective to that? And that gives you an additional solid confirmation where the market is in an uptrend, downtrend, pullback, whatever it may be. So YM still struggling. ES, same picture. We started to move up to get the smaller weekly picture. We'll take a look here at the MML as to why that might have stopped there. Again, you could throw in a Fibonacci or any fractal line for that matters, but 10 at least breaking above the 50. So given the S&P 500, a little notch to the top showing that market action actually pulling upside. All right, so there's the big picture on the four indices. ES, there it is, pull back to the 50, the 10, really hovering. We just continue this this wave around the 1050. We're still holding above key big picture moving averages, as we did find support that 200-period moving average there back in February as the contract rolls over. So we'll yet obviously to see what will happen here, but right now momentum consolidated at the key moving averages. All right, taking a look at the bigger picture, take a step back. Take a look at the weekly as this entire move down from the lows 50 up to the MML highs. This is a weekly chart. We love to look at this as using the bigger picture. We found support. We were hoping to come down and maybe test that 2,500, but shorter term MML found some support there, those Murray math levels, and there it was, 78.25 down to the reversal oversold area. And right now we're just kind of grinding up. Doji bar in week 11 here gives us a sign of consolidation again. Indecision we had in week 10, and a nicer, bigger Heiken Ashi bar trending up and closing above the previous week. So just barely a square flat finish here for week 11. So sideways action doesn't make anything exciting to write about, but there it is, flat doji indecision. We're in a waiting period. All right, wanted to actually throw up. I had another. Let me skip it. Well, here's the SPY. Let's jump into this, and I have another new ES MML chart I wanted to show you here. But here we are on the SPY again. Same picture. We got the 10 in the green. The red is the 50. We have a 100-period moving average. We found support the MML. So again, we're getting the same picture on the SPY index, the ETF here. Weekly still holding upside, but we get these extreme moves, but we're really very small finish at the end of the week, but we are closing above the previous highs of the prior week. So we continue to work our way back up above a 2134 period moving average here on the On the daily, 10 just, again, barely holding above that 50 as it just starts to get above. We touch that MML high. We come back down. We're now right at the 1050. We're at the MML low. So we got to watch that 273.44. For those swing traders heading into this week, if you're on the shorts, obviously you don't want to move your stop down, maybe 277.34. Your targets would obviously be down to the 100 and major support down here at 265.63. If you're looking for a move back up, watch for the major support resistance and see if the price action bounces back up. That would be a good turnaround point on the SPY. All right, last picture here to give you the ES 30 minutes. This is a beautiful picture of the whole week. We throw out a bigger picture time frame. Here we are back around Monday's price action early session. MMLs found a high for the week up to the reversal and bang all the way down. So if we go back a couple charts and you say, whoa, why did it stop there, right? You're looking right there on the ES. Nothing on a daily picture. I don't throw much up on there. Open gaps up above. Yeah, but look at that ES finding that MML 30-minute and then driving all its way. So this is a great chart for those swing traders who are looking for that short position or the long position. As you can see, we might just get that support right down here. We'll obviously have to watch Friday's price action. Again, finished off Quad Witch Friday, and price action lifted to the short-term MML, drove it back down to that support level that we saw all week, or at least that support zone. So we'll look for the move on Monday as the bigger picture in the market that we'll paint here is still to the upside, even though we got to pull back to those moving averages. So ES definitely at a support level, throw in the moving averages, and we got some consolidation here. So if we break these MMLs, we continue further down, we have levels to project through the week. Those are things we'll look at. If we find the support here and we move back upside, definitely great opportunity for the swing trader. All right, let's jump into some other charts here as we move into the week. Let's take a look at the big picture for week 12, where we are right now. We have open gaps down below 1405. There's the key moving averages on each of the prospective indices here, all-time highs at the top. The white lines here being the open gaps both above and below. So flip a coin, we can go either direction, especially on that ES Doji bar. All right, let's appreciate the what is the big technical momentum outlook. I wrote about this last week in my article that I post each week on Trading Fibs and at See It Market. Again, laying out a foundation of what charts that I like to watch. I've been working on those ETFs now on the website, so that's been a big boost to painting that picture of where the sectors are. And so I hope you guys will take a look at that. I'll show that to you here at the end. All right, so let's first to appreciate the total stock market index, VTI, big picture. Again, we had that pullback very much masking the SPY and the ES here. So we're talking about the whole market index. Where are things? Again, a little bit closing up above each prior week, holding above a 2134 period moving average, 10 above the 50, above the 100, above the 200. So that's your big picture. That's your uptrend. That's how I view it each week. I like to look at the HA bars as complementary. These bars right here, the solid body tails ups, is an absolute confirmation of confirmed uptrend. Goes along sometimes with the IBD. The IBD market outlook right now in a confirmed outtrend. 100% invested in the ETFs right now. So we're still holding upside, but definitely a pullback in week 11. And so looking to week 12, we'll want to see that support here off the moving averages. I can't say it's a high, it's a low. Consolidation is the key here. And that's the word for the week, as it can go in either direction. So jump to the momentum outlook here. Again, if you're looking for end of the quarter rebalancing, you got a couple more weeks. That's for your long-term swing position. We told you, again, use those 30-minute MMLs. Great opportunity. If you're on the short already, just move the stop down. If you're looking for a turnaround, you obviously want to monitor that. Intraday, just got to be ready in both directions. All right, so VTI, there's your big picture. Small pullback in an uptrend. Another chart I like to look at, FFTY, IBD fundamentals here. Again, consolidation at the top is very strong upside. You don't have to do the homework on these. I love the IBD 50 especially as an ETF here, an indicator, and very strong. 10 above 50, above 100, 200. We're still moving back upside, but again, MML's finding a little bit of resistance up here, but Did you catch this move in March? That was the key. Solid Heiken Ashi bars is price action. Great for the swing trader. Great for the intraday trader as well. All right, so 2 charts right there supporting technical momentum. Strong consolidation, though. There it is. There was across the board. So we want to see if market, by the way, is coming back down on the fundamentals. It will break this resistance level 34.38, and that could be the first indicator that that was the high. All right, also appreciate the leaders, LDRS, as this chart is a new. You could see building up a little bit of time here on the 50, but price action a little bit sideways. This is the ETF for the ETF leaders through the IBD, something you might want to watch. So again, a chart that we'll watch in progress, but right now, holding in consolidation, no downtrend here at all. All right, XLK, appreciate the tech sector. Just wanted to see where things are on that NQ, 10 above the 50, above the 100. We've watched the FDN, another ETF as well, holding strong above the 2134 EMAs. I got no reason to think that we're calling a downtrend here. Again, we saw that pull back off the highs on the NQ futures, so a little bit of support here, target upside right there, 71.88 on the shorter term. Midterm here. Shorter term is the smaller bars here, usually a week picture. So we found support down here as the longer term picture is we're still above the resistance. So again, momentum upside on the tech sector at this point. I know you all want to call the highs, but that's just a matter of flipping a coin because half of you will get it right and half of you will get it wrong. All right, taking a look at the dollar index. Dollar index continues to come down, but or I should say holds as well. Consolidation. So you got markets holding at the high on the total stock market index, VTI, FFTY. UUP is holding down. This is the index I follow for the dollars. We could see it's been pretty much downside. It's the opposite, 10 below 50, below 100, below 200 as we find. So, bigger picture, yes, we've been at the support level. No question about that. If you go back on the chart to the left, you'll see that we had a nice drive down. So, we are finding support at the lows, watching the 10, crossing the 50. We had an upside this week as the markets pulled back. Obviously, inverse relationship. So, now we're back at the MMLs, 2 levels here. We got short-term, mid-term here. So, any breakout of this level up to 23.78 is what we will be watching, and that gives us the picture here up to 23.83 on the weekly. So again, pull back here off the lows on the dollar right now, trending up, headed into week 12. All right, take a look at the VIX as well. Volatility index here, price action almost off the MML lows on the weekly. Again, a little bit messiness as we know that the VIX got up to those numbers, 56.25, bang, right off the overbought. 10 still above actually the 50, but we just got a mash here of moving averages. So a lot of consolidation sideways. So that's volatility. It goes up and down and could be down to 15, swings right back up to 20. Again, the big picture to the left on the VIX was just a descending price action momentum. Now we get huge volatility here on the VXX. So again, shorter term, we're in a very small range here. We've been holding in between that 15 to 19 range. Here's the VXX on the VIX, but on the VXX here between the 42 and the 39 doesn't give much room for action. So anything lower, look to the major support here, 37.50 down to the 50. If we bounce back up, look back up to 43.75. All right, taking a look again, another indicator for the market momentum here on the advancers decliners. Again, we had a nice move up, pulled back a little bit towards the end of the week as the Dow still having a struggle there, trying to get back up above the 10 in the 50, or to cross over 10 above the 50, but back in sync towards the end of the week. Again, what we want to see is advancers and decliners moving together with the Indu index, the Dow index here, moving in sync. If they're parity, if they're in different directions, you don't want that. That's a market out of sync. So markets in sync there, that's a good indicator that markets are still holding upside. Take a look. Another one of the indicators for big picture momentum are the transports, industrials on the left, ETF, transports on the right. You want to see that they're in sync. And there it is. All you have to do sometimes is look at these 2 charts and see there's consolidation. And then voila, we got consolidation across the board on the other charts. So there it is. At least they're in sync. That's the number one. If we want to see uptrend, we want to see trending bars. So 10 below the 50s, that's an indicator of yet struggling momentum in the markets. I want to get back up here to 200 on the transports. I want to get back up to 153.13, all the way back up to perhaps 156. That will be a momentum in the market that will lift, and that will lift the rest of the indices. Anything backwards, we're looking at 146.88 down here to 187.50. Indecision all across the board. All right, another market volatility I wanted to point to. Some of you have been looking at the psychological market indicators. Love to read them. This is the VIX indicator. Again, a little bit of description in the IBD newspaper. Looking for the volatility index to rise more than 20% above its 10-day moving average, which can confirm a positive reversal in the market. So we could see the VIX as based on the CBOE. Here we could see coming down after those highs correlated to the S&P 500 and using the moving average down here as well. So something an index that you might want to follow as well. At least maybe on the IBD. Again, Bulls-Bears relationship. We're watching for the Bulls, the Bears being the green down here. We want to see the Bears crossing over above the Bulls. Once those Bear indicator cross above that Bull index, then we might see a confirmed downtrend, or at least a temporary. And the big picture, margin debt, we got ways to go, Jedi traders, as markets tend to peak above 50.55 and then come downturn. We are somewhere near closer to those lows, so we definitely have more room to the upside to find a tops. So there's the big picture headed into this week. Technical outlook for week 12. All right, let's take a look at the economic calendar for the week. Economic calendar, again, mentioned the FOMC meeting coming out, expected rate hike to come. It's, again, how many more rate hikes for the year? We got typical jobless claims on Thursday and home sales to highlight the week as well. All right, on the outlook that I'll post here soon, we got earnings coming out, Adidas, FedEx, Micron, and KB Home. Watch that FedEx to see if it's taken an impact there with Amazon Prime. All right, that's pretty much it, guys. Consolidation across the board. Again, I implore you to watch those moving averages. Watch that 10, watch that 50. Look at where price action is in relation to it. And again, Q2 coming up, an opportunity to rebalance your portfolio, swing positions, and intraday. Always be ready in both directions. And I wanted to bring up that chart for you, tell you exactly what we're looking for intraday. That is your intraday picture. That is what you're looking for in Seek Every Day. That's the T3 moving average or S3 moving average strategy that we implore you to use in our trading room or as a simplified strategy for high probability and keeping it simple. Again, if you're interested in these strategies, we got them a little bit of information over here on my education tabs. There it is, S3 strategy, MMLs, if you're interested more in that as well. All right, that is a wrap for the technical outlook for the week. Feel free to stop by here at tradingfibs.com. Lots of great information. You can also follow me on Twitter here at TradingFibs. You can also follow me on StockTwits as well. My trading mantra, one simple strategy, one market, any chart, any time frame will keep you disciplined. I love Heiken Ashi bars. I love Flex Renko, but you can use these on minute charts, volume charts, whatever it is you're liking. I only watch what's in front of me and on my charts. I leave the crystal ball to the experts, and I keep the bias at the door when trading. Hey, if you're interested in joining us, by the way, in the trading room, go ahead and click on the membership page. Nothing obligatory for you to sign up. Just come in, join us for any Thursday or Friday to view live chart setups as they happen in the trading day. Be our guest, and we're happy to take you around the room and show you what like-minded traders are like. All right, that's the recap for the week. If I've missed anything out, I'm sure to post it online. For all of you, have a great week. Have yourselves a Blue Zone day wherever you may be. Have yourselves a good day. Have yourselves a good night, and good trading to you.